Hello, good morning, ladies and gentlemen. How are you all doing today? It's a happy new month to you from this part of the world. Let's confirm quickly that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. So I would like to see some feedbacks in the comment section, please. If you can see my screen and you can hear my voice, kindly type in hi in the comment section so we get this started. So let's see what's happening in the comment section. Okay. Hamira Singh, good morning, thank you. 398495. Ravin Crow, thank you. Hi, thank you very much. Hey Carrie, good morning. Happy new month to you too. Francisco 56, hi, good morning to you too. It's a new month and I'm so excited to welcome you to another promising session on the X trend speed. My name is Sharif Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, for those who are joining us for the first time, I welcome you on board, and I'm so glad to have you around. So what we simply do here on a daily basis is to gather here in anticipation of the New York session, review all the pairs that we have been monitoring since the beginning of the week, identify trading opportunity, and seek out for how to position ourselves in such a way that we can catch any trading opportunity during the New York session. And like I used to say, it might look a little bit complicated at first, and that is why I advise that you continue to stay tuned in and continue to be part of the session. We come in here on a daily basis, 10 a.m. UTC, and with time when you get to flow with us here, you get to understand how this works, and by the end of the day, you will be able to trade the financial market independently using the information you have gathered here. So once again, you are welcome on board. And on that note, let's dive in to the market. Well, I would have looked at the economic calendar, but okay, we do have an economic event coming up in 3 minutes from now, as the Bank of England's Governor Bailey is going to be having a speech in a couple of minutes. So we are going to be looking forward to see how this speech is going to be affecting the GBP USD. Then we also have the ISM manufacturing PMI coming up later on today, and that is in about 4 hours from now. The Institute of Supply Management will be publishing the business conditions in the US manufacturing sector. So we are going to be looking forward to see how this is going to be played out. The previous data came in at 47.4, which is still not on a good side, as we need to be above 50 to have something positive for the US economy. We have a consensus projection of 48, which is a little bit higher than the previous expectation. So we shall be looking forward to see what the actual data is going to be like, and obviously we are going to be seeing how the participants in this market will be anticipating this event on the USD pairs that we have been monitoring since the beginning of the week. So with that being said, here I will be diving right into the current market structure, and the first pair we are going to be talking about this morning, as usual, is the US oil. So on the US oil, what do we have on the US oil right now? Well, it's important I run through how we started the week, so that you can also, if you had missed out on our previous session, so that you can also be on the same momentum with us. So the beginning of the month, we had the situation where price was consolidating between the $76.68 level, which we initially identify as the resistance level for the week, and then we had a support level for the week at the $75.80 area. So there was a little consolidation in this market, which emphasized the indecision in the market at the beginning of the week. And you all know what we look out for whenever we spot this kind of structure in the market. We wait for price action to either break out of that channel to the upside to give us trading opportunity, or breakdown of the channel to give us selling opportunity. Well, as we see right here, we saw our price action broke down the $75.80 level, where we took advantage of some selling opportunity a couple of times there, as price action actually moved about I think 70-80 pips thereabout before we started seeing this bullish momentum that began during the New York session on Monday. And if you remember what we said about the current structure after identifying this bearish trend line that has been going on in this market in the last couple of weeks, you will remember we identified, connected a series of lower highs here, which gave us that bearish trend line. And what we saw at the beginning of the week was price action breaking out of that structure, doing a retest of that level. And one interesting thing about that structure is that price action transitioned into a reversal pattern around that area. Let me show you, let me give you a visual representation of what I'm talking about. So we saw the first touch here. We saw the second touch with a beautiful reversal pattern with a neckline sitting at around the $76 and the $75.80 level, where a breakout of this structure will be triggering our buy position. And we were lucky enough to be part of this move as we rode the move at the breakout of the $75.80 level. Price action did a retest of structure, and since then price action has been finding higher highs. And then we were opportune to add more position at breakouts of structures like the $76.68 level, which we actually identified during the live session yesterday. We said we are going to be looking forward to a breakout of that structure to join that rally to the upside. And in fact, price action moved significantly well from the $76.68 level, as it moved about 120 pips in our direction before this bearish momentum started. We saw price action come back to do a retest of that structure again. So another 120 pips move also happened at this point before the selling momentum took over this market. So if you had been with us here on the USOil since the beginning of the week, you will definitely be in profit at this point, as price action has moved a whooping over 200 pips in our favor since we entered that position above the $75.80 level. Now, in addition to this current structure here, what we identified here was a bullish momentum since the beginning of the week. And to further emphasize the strength of the buyer since the beginning of the week, we were able to connect the series of higher lows here, which has given us this bullish trend line. And one thing I saw here during the early hours of today was, if we consider the selling pressure that has gripped this market since the New York session yesterday, as you can see here, it is very, very obvious that as soon as price got into that $77.85 level, we have been witnessing selling pressure from that area, negating all attempt by the buyers to break out of that structure. And this was a beautiful signal that sellers might likely be coming in. And I shared this on my public platform this morning, where I said if price action breaks down the $77.40 area, which also shares a beautiful confluence with that bullish trend line here, we might likely be seeing some selling opportunity, as the bullish trend line may no longer have the capacity to continue to hold that bullish momentum. And this was exactly what happened. Price action broke down the $77.40 level, and if you have been part of this trading opportunity, kudos to you for being on standby to catch that move, as price action is currently running with about let's see, about 80 pips in profit at this moment. So congrats to everyone who are taking advantage of this opportunity. And the next thing you want to be doing right now is to secure this current position, as we don't want to lose whatever we had made so far on this current one. So the most appropriate area to secure this position is to place your stop loss somewhere right around the $77.20 level. Let's secure this current position and wait out to see how price action will be reacting to the $76.68 level. Now let me refresh our memories regarding the $76.68. Now, if you look at what has been happening here since the beginning of this week, remember I told you how the $76.68 level had been a strong resistance in this market. As you saw here, as soon as price got into the structure at the beginning of the week, we begin to see some selling pressure resume from that area, negating all attempts of the buyers to break out of that structure. And not until the New York session yesterday when we saw the breakout. Okay, I think this actually happened during the live session yesterday. I think towards the end of the live session yesterday, we witnessed the breakout of the $76.68 level, triggering a buy position. And with a breakout of structure like this, we all expect that at one point in time, from a technical standpoint, price is likely going to come back, do a retest of that structure to incite another wave of bullish momentum. But what we saw here is quite interesting, as the bullish momentum we expected to start from the $76.68 level appeared to have been negated. As you can see here, price was unable to break the previous high, hereby giving us a higher low. And whenever you have a higher low with this kind of situation following a strong impulsive move to the upside, there is a high chance that sellers are gradually coming in this market. So what this simply means that we might be going through a profit-taking activities right now, as those who are taking advantage of this opportunity from this current structure will definitely want to be doing some profit taking at one point, and this will be reflected on the chart as a retracement phase. So how far will this retracement go with what we don't know at this particular point in time? But if we zoom out a little bit into the structure we identified at the beginning of the week, if you remember, we had a major bullish trend line which we identified on the 4 hours time frame. We are still going to go into that in a moment, as we saw higher lows here which we identified after connecting the series of higher lows, and there is a likelihood that price action could retrace back into the structure in anticipation of another wave of bullish momentum. So if we continue to sell this bearish move to the downside, we might be having our TP target fall around the 76 and the $75.25 level to secure, to have our TP target sitting around that area. And now, depending on how price action reacts to this trend line, will now determine if we are going to continue to sell the USOil, or we shall be anticipating a bullish momentum from this area. So there are two things that could happen. If it happens that price action comes into this trend line, we might see buying pressure resume again to incite another wave of bullish momentum, or we could see a breakdown of that trend line to incite a sell-off in this market. So these are the things we are going to be looking forward to today. So for those who are already in this trade, ensure you have moved your stop loss accordingly to secure your position. And one thing also we also going to be looking at is how price action will be reacting to this level to decide what our next line of action will be. And if we begin to see buy pressure resume here, this is likely going to be a retracement into the structure that was broken earlier, that might likely incite another wave of bearish momentum. So we are going to be keeping this possibility in mind too as well. But before I go into the details of how to take advantage of a trading opportunity around the $76.68 level, let's quickly run through the daily time frame. Let's see what is really going on the higher time frame. Then we shall be coming back into the lower time frame to decide what our next line of action will be. Now, scaling up into the daily time frame, what did we see at the beginning of the week? So this is what we saw here at the beginning of the week on the USOil. So on the daily time frame, it is quite obvious that price action has been bearish in the last 8-month. And to further emphasize the strength of the sellers in this market, you can see that we connected the series of lower highs here, and this has resulted in the appearance of this bearish trend line. Now, things got a little bit interesting during the last quarter of last year, as we saw price action was caught within a $5, is it $12 consolidation phase, which was between the $82 level and the $70 area, to emphasize the indecision in this market. Now, if you look at what has happened here, you can see within the consolidation phase here that buyers are really struggling to push price out of this current structure. As you can see, we have been witnessing higher lows since the month of December, since price tested the $70 level, the lowest point price has ever been in the last year, and we saw higher lows. We saw another higher low here, and during the course of last week's trading session, we saw another higher low. And one thing you would notice that sellers are continue to negate all bullish attempts here. As you can see, as soon as price gets into the zone here, we saw sellers negating all attempt by the buyer. So it's a really sandwiched situation we are in right now. And then as we head into the new week, at the beginning of this week, we identified the $76 level to be serving as our yardstick for trading activity for this week. And how did we say we are going to be using that structure? Well, we said if price action trades above the $76 level, we continue to look out for buying opportunity. And if price action drops below the $76 area, we shall be looking out for selling opportunity. But the way things are looking right now appears that price is currently above the $76 area, and definitely we want to be patient enough to see how price action will be reacting to this current structure to determine what our next line of action will be. And one thing you will notice here in the last 36 hours now, you will see that as soon as price got into that $77.60 70 area, we have been witnessing selling pressure in the last 48 hours. So what we want to be doing now is to scale down to a much lower time frame to look out for how participants in this market has been reacting to that $77.80 area to decide what our next line of action will be. Now, if we scale down to a much lower time frame, let's first of all go into the 4 hours time frame. There's something here I would like to call our attention to. And on the 4 hours time frame, look at what we have here. The first thing you will notice on the 4 hours time frame is the fact that price action has been bearish in the last couple of weeks. And what you saw here, you can see after identifying this bearish range, which was as a result of connecting the series of lower highs here, we have this bearish structure figured out. But one thing we saw during the later part of last week's trading session was quite interesting, as we saw as soon as price broke down that $76 level, which I identified on the daily time frame, which I said is going to be the yardstick for trading activity for this week. We saw the breakdown of that structure happened on the last trading day of last week's trade. Okay, I think the second half of last week's trading session. As soon as price dropped into the $74 area, we begin to see some buy pressure resume from that area. Price moved into the bearish trend line with the hopes that it's going to respect that trend line one more time to incite another wave of bearish momentum. But no, that did not happen. As we saw price drop a little to the downside, it was a sharp rejection of somewhere right above the $74 area, which triggered this bullish, this hammer candle, giving us a clue that there are still tendencies of buying momentum gradually coming in behind the scenes. And as a result of this, we connected this series of lower highs here to identify that bullish trend line. And since the beginning of this week, here on the 4 hours time frame, you can see we had the breakout retest of that bearish trend line to give us a signal of a bullish momentum. You all know from a technical standpoint, whenever we have a breakout of structure, a retest of structure will be followed by buying pressure on our lower time frame will be a beautiful signal to join a trend continuation. And thank goodness we were lucky enough to be part of this bullish momentum as we rode the move all the way from the $75.80 level into somewhere around this area when we started seeing selling momentum gradually coming in again. As you can see here, this lasted about let's see, 1 2 3 4 5 6, about 24 hours. We saw selling pressure. Sellers continue to negate all attempt by the buyers to break out of that structure. And if we go back into the past and to go to as far back as the second week of last month's trading session, we can see what happened around that area. We saw selling pressure here. During the on the 20th of February, we saw selling pressure resume around that area, and during this week now we are beginning to see selling pressure around that area as price is yet to break out of that structure. So for a bullish momentum to be very valid at this particular point in time, we need the breakout of that significant structure at the $77.40 level to further emphasize the strength of the buyers at this particular point in time. But now that we are seeing selling pressure resume from that area, and this selling pressure had actually broken down that bullish trend line that has been supporting bullish momentum since the beginning of this week, it is more or less a beautiful signal that price action is likely going to be going through a retracement phase at this point. And like I said, on the 1 hour time frame, we shall be looking forward to price action dropping back either into this bullish trend line, which I said has been supporting bullish momentum since last week here, to see how price action will be reacting to the structure here to decide what our next line of action will be. And if you look at that structure here, it also shares a confluence with a support level for this week, which is sitting at the $75.80 area. So for this selling momentum we have taken advantage of at the beginning of the week, we should be having our TP target sitting somewhere between the structure here, $75.80 and the $75.25 area, at least in the meantime. And like I said, if you had missed out on this opportunity here, obviously we are going to be looking out for how to take advantage of the another position here. So right now, price is currently trading along the $76.68 level, which was serving as the resistance point for the week. So we are going to be going down to the lower time frame to see how price action is currently reacting to that structure, and whatever technical parameters we're able to identify there on our lower time frame shall be the basis for our trading activity for today. So from the higher time frame right now, we are seeing something very bearish now. So for buying the US oil here, we want to see price action break out of the sell zone, the supply niche that we have here, to buy the US oil at this particular point in time. But if price action continues to trade to the downside, that is break down the structure, we look out for selling opportunity. So let's scale down to the lower time frame. Let's see how participants in this market is currently reacting to the $76.68 level. And in order to do this, I will be scaling down to a much more lower time frame, like the 15 minutes time frame, so that we can see things more clearly at this point. So on the 15 minutes time frame, this is what we can find here. Remember, the $76 level has been a buy niche a couple of times in the past. At least in the last 24 hours, we have been seeing some buy niche around that area. And what we can see here in the last 1 hour is quite interesting. As you can see, sharp rejection of this current structure here. And because of this sharp rejection, I have advised us to move our stop loss for the current sell position we took advantage of at the breakdown of that trend line. And let's wait for price action to actually close below the structure on our lower time frame. Then look out for selling pressure below the structure. Then we could actually add more position to our existing trade. And if you are not yet in this trade, it will be a beautiful opportunity to join that decline to the downside. So we need a candle to close right below that structure to give us a clue that price action has actually taken out all the buy positions here, to give us a confirmation of price action dropping further to the downside. So this candle is about 48 minutes left for it to close right now, 48 seconds left for it to close right now. So let's see, and it appears it's going to close below that structure. If it does close above that structure, then we want to be looking for a retest of that level to join or add more position to our existing trade. Now, if the contrary happens here, where we start seeing price climb back up above the $76.68 level here, evolving into buying pressure above the structure, that is price continue to reject, unable to break down that level, then this might incite a retracement phase. And at this point, we are not getting too excited to join a retracement phase here. Remember, we have a breakdown of this bullish trend line here, a structure here, which if price action breaks down structures like this, we expect that one point in time, price is likely going to come back to do a retest of structure, followed by selling pressure around that area to incite another wave of bearish momentum. So if it so happens that a bullish momentum comes in and climbs back above the structure, we shall remain patient as sellers in this market to wait for price to come within structures around the $77.40 level. And what we want to be looking forward to around that area is a reversal pattern. It could be a double top structure, head and shoulder pattern, breakdown retest of the neckline on our lower time frame, then we could join that decline to the downside. So this is one way we want to be trading this. And if you are a scalper or a counter trend trader and you feel comfortable scalping the market, well, you could take advantage of buy pressure above this level, which is stop loss sitting somewhere around here. And if we look at the pip meter here, you could be having about 70-80 pips they're about to catch if price action moves in that direction. But if price action does not climb to the upside here and we continue to see selling pressure below the structure here, we'll definitely want to be adding more position to our existing trade. And it appears price action is continuing to drop to the downside. So if we scale down to a much lower time frame, like the 3 minutes time frame, and here we can see we have a structure to play around with. So what I'll be advising you to do at this point is to have a self stop order triggered right below the $76.45 level to join that decline to the downside. $76.54 45 level, let me put it like that. Then if price action drops below that level, then you should be having your stop loss sitting around the $76.80 area at this particular point in time. So this is the 3 minutes time frame. We have a structure already on the 3 minutes time frame. If selling opportunities is going to be coming in here, we want to see our sell stop order triggered anywhere around the structure, then we could add more position to our existing trade. And if you are not yet in the sell position we took advantage of yesterday, then definitely you want to be joining that decline to the downside from that area. But if this buy pressure here continues, that is, we continue to see rejection of this level in such a way that price climbs back above the $76.78 level, followed by buying pressure above the structure, then this will be a retracement of that previous impulse leg that we identified earlier. So I will be going back to a much higher time frame right now. I think the 15 minutes time frame, okay, I think it's okay I go here. So it now depends on how price action react to the $76.45 level that will determine if we are going to be buying or selling the US oil. So I hope we'll be on standby to catch that move as it happens. And then if price action continues, I told you we are going to be looking forward to see how it will be reacting to the $75.80 level, which I said shares a beautiful confluence with that major bullish trend line that we identified at the beginning of the week. So if the sell momentum continues, we have in our TP target around this area, and let's see if a breakdown of that structure will happen. If a breakdown happens, then we want to be adding more position to our existing trade. And if price action gets here and we start seeing buy pressure resume from that level, then we will be anticipating the second wave of the bullish momentum that started this week. So let's wait and see how this plays out. It appears our sell position has been triggered right now as price action has broken the $76.45 level. So kudos to you. If you had caught that move, ensure your stop loss is somewhere right above the $76.68 area, and let's see how far this bearish move is going to go. Best of luck on that one as I move on to the next option. If you do have any questions, you have inquiries, feel free to drop your inquiries in the comment section. I'm always here to help. I'll be checking the comment section from time to time to see if there are any inquiries in that regard. So I will be moving on, and the next option we are looking at this morning is the US tech. Now, the US tech looks a little bit choppy right now since the beginning of the week. As you can see, price action has been trading around within the $12,150 and the $11,960 area since the beginning of this month. And if you remember, at the beginning of the week, we identified a channel which was situated between the $12,000 and $20 level, which was initially our resistance point for the week. And then we had the support level for the week started at around the 11,960. So the 11,960 is the lowest point price has ever been on the US tech for this week, as you can see here. And we were able to take advantage of a buy opportunity on Monday when price action broke out of that $12,020 level. So we were able to take the first situation here. We had about price action moving about 130 pips in our direction before the sell momentum came in here. Then during the live session yesterday, we were around here. Where were we during the live session? We were around here during the live session yesterday, where I said we continue to look out for selling opportunities if price action drops back below the bearish trend line we identified here during the live session yesterday. And if price action breaks above the 12,070, I told you we are going to be buying the US tech. And in fact, immediately after the live session yesterday, we saw the breakout of the 12,070, which triggered that buy position, and price action moved about 43 pips in our direction before this bearish momentum came in. And I hope that you secured your position as price action moved considerable well in your favor, as if you had done that, you would either be close taken out with some small profit, or at worst case scenario break even at that point. Then we saw the situation here again where buying pressure resumed at this point again, breaking out of that structure the second time, and this time around price action moved about 75 pips in our favor. I hope you made some profit on that one before this bearish momentum took us out of that position one more time. And in the last 12 hours now, 10 hours now, we have seen a situation where price has continued to find higher highs in that regard. Well, for me this morning, I had placed a buy stop order above the 12,070 one more time to see how price will be going, and it appears my position is triggered and currently running with about 20 pips in profit at this particular point in time. And if you are part of that trade there, kudos to you for being on standby to catch that move. But before I go into the details of this current structure and why have I bought the US tech at the 12,070 and why do I think you should be buying above that level based on this current structure, we shall be scaling up into the daily time frame. Let's see what is really going on from an holistic point of view. Now, if you scale up into the daily time frame, this is what you are going to be seeing on the daily time frame, which buttresses a possible bullish momentum at this particular point in time. Now, what did I see on the daily time frame? I will be showing you that in a moment. So look at the daily time frame here. Before we go zoom into the structure, for those who are not part of our live session, I want to quickly run through what has been going on this chart prior to this present moment. And if you look at what is happening on the daily time frame right now, you will notice that price action has been bearish. And in fact, throughout the course of last year's trading session, we saw continued lower highs. And if we connect the series of lower highs on this chart, you will see that we have a beautiful resultant bearish trend line, which has been guiding selling momentum to the downside. And things got a little bit interesting in the month of June last year when we saw that the $11,000 level became an area where majority in the market agreed that the US tech is quite cheap enough to buy. As you can see here, all attempts by the sellers to break down the structure was negated by the buyers at every point in time, and this lasted about 6 months throughout the second half of last year. Buyers continue to negate this selling opportunity below the structure, and at the beginning of the year we finally saw buying momentum gain a huge traction, breaking out of the 11,000 level and doing a final breakout of that bearish trend line that has been guiding bearish momentum since the beginning of last year. And with the breakdown of that bearish trend line, it's a beautiful signal that the trend line no longer have the capacity to continue to hold that bearish momentum. And since the breakout of that trend line, what we saw here was price action continue to finding higher highs and higher lows, which finally culminated at the 12,900 level, where we begin to see selling pressure resume from that area. Now, talking about the 12,900, you will see in the past here that the 12,900 level has been a major determinant of selling pressure in the past. And look at what happened. Price action rejected it a couple of times. Price action transitioned into a reversal pattern in the form of a double top structure, which from a technical standpoint is a strong reversal pattern. And you all know what we look out for whenever we do have a reversal pattern like this. The next thing we want to be doing is to identify a neckline area, which we shall be using to sell with this kind of structure. And that was exactly what happened last week. We were able to take advantage of the selling opportunity here, and price rolled all the way down into our TP target at that psychological level at the $12,000 area. And in addition to the breakdown of the neckline area, there's another thing I would like us to see here to further buttress the strength of the sellers at that particular point in time. Now, if we zoom out and look at what has been happening here since the beginning of the year, you will see the bullish momentum was emphasized after connecting the series of higher lows, as we have a bullish trend line to emphasize the strength of the buyers at that point. Now, the breakdown of the bullish trend line coupled with the breakdown of the neckline of that reversal pattern was a huge opportunity to sell the US tech at that point. Now, in the last 1 week now, what we have observed is that price action has been trading around the $12,000 area, and in fact that area appears to be characterized by buying pressure. As you can see, every attempt by sellers to break down the structure has been met with strong resistance from the buyers. So with this situation here, the signature we have here is a bullish signal. And look at what happened the last time price action traded around that area here, which happened during the later part of the month of January, stroke the first day of the month of February. We saw the breakout of that structure here to inside that bullish momentum. Now the price is back into that structure. It appears that the structure here wants to resume that buying pressure, as it has a strong memory for buying powers. And what we have here right now, we need to scale down to a much lower time frame to see how participants in this market has been reacting to the $12,000 level to decide if we are going to be buying or selling. And like I told you on my 1 hour time frame, I told you I already bought above that structure, and it appears that price action will continue to climb to the upside. So, but before I scale down to the lower time frame, let us project where we think our TP target might likely be if this bullish momentum continues. Well, remember I told you we have a neckline at the 12,300 level, which was broken during the course of last week's trading session. And with the breakdown of that neckline area, which is a critical structure, we all know that at one point in time, price is likely going to come back to do a retest of that structure to incite another wave of bearish momentum. So that is one area we also want to be having our TP target if you are a short-term trader. But if you are a long-term trader like me, I have my TP target somewhere right above the 12,400 or the 12,600 area. And the reason why that is simply because of this bullish trend line. If I draw this bullish trend line very well and look at what we have here, and if we consider the fact that the bullish trend line here was broken to the downside, there is a likelihood that price action may come back to retest that bullish trend line before another wave of bearish momentum will happen. So one thing I'm doing here, I'm having my TP target around the 12,600, 12,800 area, at least in the meantime. And as soon as price gets into the $12,300 level, I will be securing my buy position with the hopes that price action will break out of that structure. And if price action does not break out of that structure to welcome another buy position, and we start seeing selling pressure below this level on our lower time frame, then definitely we shall be getting ready to join a decline from that level. So let's scale down to the lower time frame right now, and let's see what is really going on around the $12,000 level. Now, if we scale down to the lower time frame, the 1 hour time frame here, going back into what we saw at the beginning of the week. So this is what I saw here. So since the beginning of the week, like I said earlier, price action has been choppy, trading below within the 12,150 here, and the 11,960. So it might look a little bit complicated for you if you can identify the structures within this area. So what we just need to be, we need to be very patient here and look at what is really happening in this market. Now, the week started on a bullish note. As you can see, we saw buy pressure resume at 11,960. This is where price action started the week. And one thing you will notice is that price is yet to drop below that structure. And the next time price came back into the 11,960 was during the early hours of today. And as soon as price tested at 11,960, what happened? We saw a sharp rejection of that structure to emphasize that buyers are very strong in this market. Personally, I missed this opportunity around this area. If I was awake when this happened, I would have bought around this area, but this happened in the midnight from this part of the world here, and I missed out on that opportunity. So I looked out for another way to join that rally to the upside by looking for price action to break out of the 12,070 one more time, which is a sign that price is right back on that bullish trend line we identified on the 4 hours time frame. You might be asking me, what do I mean by that at this point? Well, if I zoom out a little bit and remember what we saw here at the beginning of the week, we had the bullish trend line figured out here at the beginning of the week when we saw this happen, and we said we are going to be using that bullish trend line to guide our buying opportunities in this particular market. Though we had a breakdown of that bullish trend line here, but it appears that this breakdown is turning out to be a false breakdown. As you can see, price action has climbed back above that bullish trend line, and as a result of this, I positioned myself above the $12,070 level to join that rally to the upside. So I hope that price action will continue to the upside from this level. If you are part of this position, well done to you guys for being on standby. But if you are not yet in this position, well, let's see how we could join this rally to the upside. Now, we have another trend line here. If we connect the series of lower highs, what I did here is to duplicate this. Let me do it again so you can see what I'm talking about. So I duplicated this, brought it here, then we have another trend line. So I want to be giving this a different color from the previous one, so I would rather give it a red color, and then let's give it a 3 pixel so it'll be a little bit thicker so that we can see the importance of this trend line during the New York session today. So if you had missed out on this opportunity at the 12,070, which is right above that bullish trend line we identified at the beginning of the week, then definitely we want to see price action break out of this trend line, giving us a sign that the trend line is no longer strong enough to continue to hold selling pressure. And if this happens, then this will be another good confirmation that we want to be going bullish on this one. Now, to make things a little bit simple for the eyes to see, we shall be identifying the structure above that level. I will show you why that is in a moment. That's a $12,100 level. Hold on a second, let's label this for the sake of clarity. So we have the 12,100 level here. Place it at the top right hand side of my screen and make it a little bit smaller so that it doesn't mix up with the structures we identified earlier. So I'll be giving this a different color. All right, so we have the 12,100 level, which also shares a beautiful confluence with that bearish trend line. Now, why is the $12,100 level very important? Now, if we extend the $12,100 level into the past, you will see how it has been a major selling niche in this market. Look at what happened here. Look left, you can see what has been happening here in the past. Selling niche, though we had the breakout here, selling niche again from this level. So we want to see price action take out all the sell positions here and then gather some liquidity, which will be reflected on the chart as a retest of structure, buying pressure on our lower time frame below that, above that structure. Then boom, we want to be seeing price action continue to the upside. So we remain bullish on the US tech as long as price remain above the $12,100 level, and if price action continues to climb to the upside, a breakout of the 12,150 level will definitely be another opportunity to add more position to our existing trade, as this will break out of that resistance point, which is the highest point price has ever been for this week. So a breakout of that level will definitely be an additional courage for us to add more position to our existing trade. Then we'll continue to ride the move all the way up, and depending on how price action reacts with the 12,200 level will determine if we are going to be adding more position or getting ready to join a decline from that level. So that is that on the US tech. If you do have any questions, feel free to drop your inquiries in the comment section. I have less than 10 minutes to take on 2 more pairs for today. I hope I am not too fast. Please let me know in the comment section if I'm not too fast, so that I can drop my pace a little bit for better understanding. Okay. All right, so the next pair we shall be looking at is the USDJPY. And on the USDJPY, what do we have here? So what are we looking at the beginning of the week on the USDJPY? So we have a situation here on the USDJPY which is quite simple. It's a simple setup here. We didn't trade the USDJPY until the second day of this week, and that was on Tuesday. And what we saw at the beginning of the week was price action was actually caught within a flat channel, which emphasizes the indecision in this market. As we can see, we have the resistance point of the channel at the 136.550 and the support level of the channel sitting at the 136.00 area. So price action trading within this kind of channel, you all know what we look out for whenever we see this kind of situation. We look out for either a breakout of the channel for buying opportunity or a breakdown of the channel for selling opportunity. And not until Tuesday morning we saw the breakout of that channel here to the upside, and I showed you how we actually entered that position prior to that breakout, as we had an opportunity identified here on the 15 minutes time frame. I will not go into the details on that one because I didn't share this during the live session, though I shared this on my public platform where we anticipated a buy position from this area. We added another position at the breakout of the 136.550 level, and price action moved into the 136.800 level before we started seeing selling pressure resume around that area. And if you recall what I said here yesterday during the live session, I said I'm not going to be selling the USDJPY unless a breakdown of the 136.550 level happen, which happens to be below the resistance point of that ascending channel we identified on the daily time frame. And I hope you did join this decline to the downside from that level, as price action broke down the 136.550 level as projected yesterday, which I said I'm not going to be selling unless a breakdown of that level happen, and this triggered the sell stop order, and price action is currently running with about 90 pips in profit. And if you are taking advantage of this move right there, well done to you guys for being on standby to catch that move, as you will currently be running with about 90 pips in profit. Now, for you to have a better perspective of what is really going on here, because it might look a little bit complicated, I want to scale up into the 4 hours time frame to share with you what we saw here that made us to look out for that selling opportunity below the 136.550. Now, scaling up into the 4 hours time frame, this is what we saw. And the 4 hours time frame projected what has been happening in this market throughout the month of February. And what you will notice here throughout the month of February is the fact that the USDJPY was quite bullish. And as a result of this, price action transitioned into an ascending channel, which we identified here at the beginning of the week. Not just ascending channel right here, we also identified another trend line within the ascending channel, which demarcated the upper half of the ascending channel from the lower half of the ascending channel, and that is this two trend line that we have here. And one thing we saw is that price action was trading above at the upper half of the channel to emphasize the strength of the buyers. Now, something interesting happened as soon as price tested the resistance level of that ascending channel. As you can see here, we had the impulsive move here that started last week, bringing price into the resistance point of the channel. So there's the first touch. We saw the second touch, breakout. Now we had this one. Price was unable to break the previous high. And what do you think this is transitioning into? Beautiful. A beautiful reversal pattern you can see here, as we have a beautiful inverse head and shoulder pattern. And you all know whenever we have an inverse head and shoulder pattern like this, it is a very strong reversal pattern. And if we consider what happened prior to this, you will see that price action broke down the neckline one time, giving us a clue that sellers are likely going to be coming in gradually in this market. Then we saw this impulsive move again, breaking down the 136.00 level another time. And this was at this point that I shared this on my public platform, that we are going to be selling below the 136.00 area. And if you had caught that move right there, well done to you, as I explained yesterday that a further breakdown of the 136.00 level will be welcoming additional position to our existing trade. And now that we have the situation here, I know now you will remember what I said here about our TP target on the 4 hours time frame, where I said we have trend lines to look out for, places where we want to be placing our TP target. Now we identified a structure at the 135.300 area, which is a possible TP target zone. We also have somewhere at the 135.00 area, which is another TP target zone, and the culminated one is at the 134.500 level, which falls exactly at the support line of that ascending channel. So I'm hoping that price action might go as far as coming back to respect the support level of that ascending channel by coming back into the structure and probably incite another wave of bullish momentum to the upside. So we might likely be going into a retracement phase going into the New York session today. So for those who are joining the bearish momentum below the 136.00 level, we want to remain positive at this point and continue to look out for more opportunities to join or add more position to our existing trade. So for today, as long as price remain below the 136.00 level, we shall be comfortable in our sell position. So let's keep it at that for now, as we continue to ride the sell momentum to the downside. And for those who are already in the sell position, ensure you have moved your stop loss, secure the current position above the 136.00 area, as we want to give room for price action to breathe as we continue to add more position at breakdown of structures like the 135.300, 135.00 area, and if possible, price action breaks down the 134.500, which I said also shares a confluence with the support level of that descending channel. Will definitely be adding more position to that sell position here. So in as much as we continue to look out for selling opportunities, I always like to paint all the possible scenarios that could happen, so that whenever it happens, we are not caught in a dilemma of not knowing what to do. So in as much as we look out for selling opportunities, and obviously this looking more bearish to us right now considering the reversal pattern we identified on the daily time frame. Now there is another thing I would like us to do here. Since we already have a higher low, price was unable to break the previous high here, so we have a higher low and we have a lower low right now. I would like us to connect the series of lower highs here, so that we can have a trend line to guide our trading activity for today. So we have a bearish trend line here. So what it simply means is that price action trading below this trend line will give us comfortable, will make us comfortable in this current sell position. And if at any point in time price action breaks out of that trend line, then definitely we want to be jittering and getting ready to get out of that trade. Now, if it so happens that price action breaks out of that trend line to the upside, then at this point it's a sign that the trend line may no longer have the capacity to continue to hold bearish momentum. So we want to be as vast as possible, as flexible as possible, so that we can catch that opportunity. I'm not saying that will happen, but if it does happen, we want to anticipate it and be ready to catch that move when it happens. So if a breakout of the trend line happens here and price takes out all the sell position on this trend line, then definitely we want to be seeing it as a bullish signal. And if that happens, we look out for buy pressure above the structure on our lower time frame, which is above the 136.00 level, to join a trend continuation to the upside. And if a further breakout of the 136.550 happens, we want to be adding more position to our existing trade. That is that on the USDJPY. If you do have any questions, feel free to drop your inquiries in the comment section. So I will be going on to take the last instrument for today, which is the XAUUSD, which has been very profitable for us. I think this is going to be the most profitable trade for us, at least for this week so far. Today is the third trading day of the week, and this is what we have here on the US XAUUSD. And I want to quickly run through what our expectations were during the live session yesterday. So during the live session yesterday, we were around this point at the 1,000. I think we were around here at the $1,810.50 level. Remember, we were in a sell position after we cited the breakdown retest of that bullish trend line, which has been guiding bullish momentum actually since the beginning of the week. So we saw the breakdown retest of the structure. We were lucky enough to be part of that move as price action moved about 600 pips in our direction before we started seeing this buy pressure. And one thing I said towards the end of the live session yesterday is that we need to take into consideration the buy pressure we have been noticing around the 1,807. I laid emphasis on what happened during the early hours of the week when we saw buy pressure resume at the 1,807 level. That was on Monday. Then we saw the sharp rejection happen a couple of hours into the end of the live session yesterday, and I told you that if price cannot break below the 1,807, then this is a beautiful signal that buyers are gradually coming in this market. And for us to be able to position ourselves so that we can catch that move, we were able to identify a structure at the $1,814 level, which shares a beautiful confluence with our bearish trend line. And we said we are going to be placing a buy stop order right above that structure. A breakout of that structure is definitely going to be signaling a buy position at this point. And this is exactly what happened during the New York session yesterday, as we saw the breakout of the 1,814 level to trigger our buy stop order. And I told you yesterday that we have structures around the 1,820 level where we shall be adding more position to our existing trade, and this was exactly what happened. So congratulations to everyone who are taking advantage of this opportunity, as you will currently have in at least 2 positions running at this particular point in time. And the first position is currently running with over 2,200 pips in profit, and the second position is going to be running with about 1,600 pips. So well done to you guys for being on standby to catch this move. So right now, what we want to be doing is to secure this current position by moving our stop loss accordingly. And what I'm thinking here is to move our stop loss to somewhere right below the 1,830 level, being a significant structure in the past. Now that we are going into the New York session today, and for those who had missed out on this opportunity, I also shared this during the early hours of today, where we also looked out for another buy position here. So I have 3 positions running here. So if you are having 3 positions as well, in fact, you are a splendid trader. So what we are going to be doing now to as we head into the New York session today is to look out for more opportunities to join that rally to the upside. And if possible, if we start seeing reversal patterns, then definitely we want to be on standby to catch that move. But before I go into the details here, I would like us to scale up into the daily time, into the 4 hours time frame will be okay at this point to see what is really going on from an holistic point of view. Then we shall be coming back here to make our decision for today. So if we scale up into the 4 hours time frame, this is what you will notice on the 4 hours time frame. This is what we actually identified at the beginning of the week. So throughout the month of February, we saw how sellers grip this market. Price action continued to find lower highs, and when we connected a series of lower highs here, we had this beautiful bearish zone that we have identified at the beginning of the week. Now, if we zoom into what has been happening here since the beginning of this week, let me zoom it in so that we can see things more clearly. So we can see that we have something like a reversal pattern at this particular point in time in the form of a double bottom structure. And if you check your technical theories, you will realize that the double bottom structure is a very strong reversal pattern, especially on a higher time frame. Now we have a double bottom structure figured out here, and then we have the neckline area falling exactly at that critical key level we identified on the daily time frame at exactly the $1,820 level. Now the $1,820 level is serving as a neckline of that reversal pattern, as you can see right now, and we had the breakout of that structure happen yesterday to further confirm that the bullish momentum here is going to be very, very solid. In addition to the breakout of that neckline area is the breakout of the trend line that has been guiding bearish momentum here since in the last couple of weeks. Throughout the month of February, we saw this trend line. I showed you earlier how it has been guiding bearish momentum. So with the breakout of that trend line, further emphasize the strength of the buyers in this particular market, and as a result of that, I identified a key level here at the 1,830 level, which had been a major determinant of price action in the past. And with the breakout of that structure and a channel formed within the $1,836.50 level and the 1,830 level, we are at a very critical market structure at this particular point in time. So right now, I want to inform you that I'm having my buy stop order above the 1,836 level with the hopes that price action is going to be doing a breakout retest of the 1,836 level for another wave of bullish momentum. So I want to be anticipating another wave of bullish momentum as the bullish momentum here gets stronger. Now, in addition to this current structure is this bullish trend line we identified at the beginning of the week, which we said shall be guiding our trading activity, and price action is trading above that level. And if you look closely here, you will see that the trend line also shares a beautiful confluence with the 1,830. So what this simply means is that as long as price remain above the 1,830 and the bullish trend line, we shall feel comfortable in our buy position. But if at any point in time price action takes us out of all our buy positions, remember we have moved our stop loss on all the buy position we have right below the 1,830. If it so happens the price action breaks down the 1,830 level, then that will also have broken down that bullish trend line here, and that will be a beautiful sign that the trend line may no longer be strong enough to continue to hold that bullish momentum. And if that happens, remember we are not getting too excited here. We want to wait for further confirmation on our lower time frame, which shall definitely come in the form of a retest of the 1,830 or the bullish trend line. But most importantly, what we want to be looking out for is selling pressure below the structure on our lower time frame. Then we could join that counter trend opportunity to the downside. And for me at this point, if we are going to be joining a sell momentum, if price action breaks down the 1,830, we shall be having our TP target at around the 1,820 level. Why are we having that TP target there? Well, if we look at the reversal pattern we have here and the neckline area of that reversal pattern, remember we had the breakout of the neckline area, and from a technical standpoint, whenever we do have a breakout of structure, we expect that price is likely going to come back to do a retest of that structure or the trend line here to incite another wave of bullish momentum. So that is why I will be having my TP target at around the 1,820 level. And if it so happens that price action breaks down that structure, then we could be thinking of selling the XAUUSD. But when that happens, we will be making that decision. So this is what we are going to be looking forward to on the XAUUSD. So we have a position right above the 1,836 level in anticipation of a trend continuation to the upside. I think this is the last pair for the day, and if you do have questions, feel free to drop it in the comment section. And for those who are not part of the beginning of the session, let's quickly do a recap of what we talked about today so that we can all be on the same page on this one. So first of all, we talked about the US oil. That was the first commodity we looked at this morning, and we already have a sell position triggered this morning. So we sold below the $77.40 area, which we identified earlier, and that level also shares a confluence with that bullish trend line, which was broken to the downside. And currently we are running with about 110 pips in profit at this point. Then we looked out for another breakdown of the $76.68 level, which triggered another position. And for those who had missed out on both of this position here, we decided to look forward to the 15 minutes time frame to identify another trading opportunity, and we were able to identify a structure at the $76.45 level, which, while I was explaining, we had our position triggered at that point. And if you had your position triggered at that point here, I will be advising you to adjust your stop loss to somewhere right around the entry point as we continue to monitor price action. So right now we are seeing some bullish momentum coming in right now. There is a likelihood that price will come back, do a retest of the structure to incite another wave to the downside, or it could go to as far as retesting the $76.77 level, a level which was broken earlier, to incite another wave to the downside. So ensure you have moved your stop loss accordingly to secure this current position. Now, if it so happens that price action climbs above the $76.68 level, I told you that this is going to be a possible retracement of that previous impulse leg, which might bring price back into the structure in anticipation of another wave of bearish momentum. So I said, if you are a scalper or a counter trend trader, then you might want to be taking advantage of the breakout retest of that structure, which might likely give you about 60 to about 80 pips in profit with your TP target around there. But if you are not a scalper, I said you should be waiting at the bus stop here, looking out for selling opportunity in the form of a reversal pattern to join that decline to the downside. So that is that on the US oil. Then we went on to talk about the US tech, where I told you how I had a buy position triggered at the $12,070 level after citing a bullish trend in this market. I explained that in detail, so I'll just make it a summary of what we talked about anyways. So we already have a buy position triggered. I told you that if you had missed out on this opportunity, then you could have your buy stop order sitting above the $12,100 level, a beautiful confluence that shares the same structure with that bearish trend line that we have there. So a breakout of that structure, I said, would be a beautiful opportunity to join that rally to the upside. So right now we have a breakout of that structure already, and there is a likelihood that price will do some retracement back. Please don't get too scared or fearful about it. There's still a likelihood that some retracement phase could happen around that area, bringing price back into the trend line or the bullish trend line here, where the appearance of buy pressure will incite another wave of bullish momentum. And if that does not happen and price action continues to the right to the upside, then definitely we want to be positioning ourselves above the 12,150 level to add more position to our existing trade on the US tech. So on the US tech, I told you I remain bullish on the US tech for this one, and we are going to be using the $12,070 level as a yardstick to guide us for this bullish momentum. So if price action continues to remain above the $12,070 level, and the bullish trend line we identified earlier, we shall remain comfortable in our buy position. But if price action drops below the structures, then definitely a momentum shift is about to come in. So let's be on standby for this perspective too as well. Then we went on to talk about the USDJPY, which we already have a sell position triggered since yesterday. I told you that we are going to be selling the USDJPY only if price action breaks down the 136.550 level, which actually happened here. And we have two positions running. We have one at the breakdown of the structure, then we had another one running at the 136.00 level. Then I went on to share with you the perspective on the 4 hours time frame, which will be guiding our TP target area for the USDJPY, and this is what I was able to identify here. We had the ascending channel figured out, and we said we might likely see a situation where price will retrace back into the structures here at the 135.300, 135.00, or the 134.500 level, which also shares a confluence with the support line of that ascending channel to incite another wave of bullish momentum. And if it so happens that a breakdown of the 134.500 level happens, then we shall be anticipating another sell position below the structure to the downside. So let's be on standby to catch all of these opportunities as well. I always state here, ensure you munch my screen so that you can use them as a reference point when you're about to make your individual decision. Then we went on to close the day with the XAUUSD, which is quite profitable for us for this week so far. It has been a very profitable trade for us, as we are having about over 3,000 pips running in profit right now, as we have 3 positions. We took advantage of the breakout of the 1,814, 1,820, and the 1,830 level. So right now we are within a critical market structure right now, where price action is currently consolidating between the 1,836 and the 1,830 area. And I told you that we remain bullish on the XAUUSD as long as price remains above this bullish trend line that we identified here and the 1,830 level, which shares a beautiful confluence with our trend line. So as long as price remain above the structures, we shall remain comfortable in the XAUUSD. Now I told you to move your stop loss accordingly. Somewhere right below the 1,830 level seems most appropriate to secure this current position, as we anticipate the breakout of the $1,836 level to join another wave of bullish momentum. And I stated here that in as much as we continue to look out for buying opportunity, we should not ignore the possibilities that sellers could come in this market. And considering the fact that we are on a long-term bearish momentum here, if it so happens that price action takes us out of the buy position where we moved our stop loss, leading to the breakdown of the 1,830 level, then definitely we are going to be seeing a momentum shift here. And I mentioned that we are not getting too excited, as we need to be we remain patient to look out for further confirmation, which is likely going to come in the form of a retest of that structure at the 1,830 and the bullish trend line. Look out for selling pressure on our lower time frame, then we could actually join that decline to the downside. And I told you that a TP target seems most appropriate at the $1,820 level, which also shares a confluence with a bearish trend line that was broken earlier this morning. Now it now depends on how price action reacts to the structure that will determine if we are going to be adding more position to the sell position or getting ready to join a bullish momentum. So these are my views here on the XAUUSD today. I wish you best of luck today during the New York session, and I hope I was able to simulate all the possible scenarios that's going to be happening today. So I think we are well equipped with the knowledge we have here right now, and we head into the market to take advantage of whatever opportunity the market presents to us. So on this note, I wish you best of luck today. I can see my Gigi's comment. Thank you very much. I take that as a compliment. I wish you best of luck today. And like I always say, we don't want to get too excited whenever price action breakdown or breakout of structures. We scale down to a much lower time frame. Look out for retest of structure supporting the direction where price action broke out towards. So on this note, I wish you best of luck today, and once again, happy new month to you everyone. Bye bye.